Great honor for me, and nice to see you. It's really wonderful. You're my hero. You're amazing. Yes. No. As you quit a great acting career for this.
Not so great.
Alex, $65 trillion. It sounds really scary, but how scared should we be?
You know what? I think it's really misleading. I think when you put the words 65 trillion and missing in a headline, it's bound to get a lot of attention. But we talk to sources all day and people in the markets who know more than me, certainly, and they're like, this is nothing. The FX swaps market is really big. But I think if you're the Bank for International Settlements, you're the central banker's bank, there are a lot of questions in these reports and in this review that they issued today. Primarily, what I look at and been thinking about all day is, okay, BIS, like you're saying there's money missing. Well, let's look at how decades-long central bank intervention, monetary stimulus, quantitative easing, whatever you call it, what kind of impact that has had on the world and the markets and how they've changed. I think the other thing that you need to think about if you're regulators around the world is what role has the LIBOR transition played in this?
Yeah.
Because I think that's something a lot of people aren't
the transition that will never end, apparently.
Well, it'll end, Romaine, I promise. We're sunsetting June 30th, 2023.
Really? Okay.
LIBOR rates in the U.S. are sunsetting, so yes, it will end.
All right, well, I'm looking for that sunset to come here so we can stop talking about it. I am, though, in all seriousness, though, I mean, it's easy to sort of say, okay, this isn't really missing, that maybe BIS is being a little dramatic, but there is a broader issue here about a bank, or at least an organization, that is supposed to sort of monitor financial stability. And there's concerns that a lot of this money, it isn't just, like I said, we're not just talking about debt. We're talking about the derivatives contracts and swaps and other things tied to them, can't be easily aggregated, can't be easily monitored. So they have no idea whether this debt is good or bad.
Well, exactly. And I think the other issue with this, and this is why I point out the LIBOR transition, is the LIBOR transition has moved all these countries have moved to what's called a risk-free rate. So it's backed by like secured collateral. So like in the US, for instance, SOFR is backed by the repo market transactions. And those are considered to be a lot safer than what was underlying LIBOR, if anything at all. So when you move, you've essentially fixed your risk. And so a lot of that risk has shifted out of these markets, and I don't think they quite understand the impact that the LIBOR transition is having, from a global standpoint. I think you need to measure.
But the risk has shifted out of the market, right?
Yeah.
But isn't that their concern? Is that there's now this shadow market? I put that in quotation marks. That they basically don't have any real purview.
Well, and the shadow banking system has always existed. I mean, if you think about it, the definition.
You're an apologist for the shadow banking system?
I'm not an apologist, but money market funds are technically a shadow component of the shadow banking system. I mean, the definition, like according to Zoltan Pozsar, is anything that's not a U.S. commercial bank. So therefore, money market funds are technically a shadow bank. So all this risk has been shifted to these other areas, and so that's what I think they need to figure out. The other thing is that the derivatives market, and they acknowledged this in the LIBOR section in this review, is that derivatives, the LIBOR transition actually dented derivatives trading. So forward rate agreements, things that are tied that you would do between currencies have actually fallen off because of that shift in risk. That they don't need to do that anymore. And these are the things that everyone's going to need to assess. That it's like, okay, great, we got to the end of LIBOR, but I don't think anybody truly understands the way in which the market risk has shifted here by essentially fixing rates where we don't have those credit-sensitive rates anymore. And I think this is what we're going to be studying for years to come, that it's not just the end of LIBOR. This is going to have effects that are going to be felt, and we're going to learn.
Well, Alex, I want to quickly go back to that big, scary number. Like you said, there's a lot of asterisks, there's a lot of nuances here around $65 trillion. But when does this, if we game plan this out, if we step into hypothetical land, what would actually cause the domino effect where this turns from a scary headline into actually something scary?
That's a great question, and I'm not even sure. And I don't think people quite understand. I think ultimately we're looking at imbalances in the risks markets. We're looking really at balance sheets, and this is where I call upon the BIS that they really need to be looking at this, seeing as they're the central banks bank, that they need to understand that quantitative easing has had so many repercussions and has shifted the risks in these markets, and that's only something that they can truly understand if they're willing to assess, from how the developed markets have changed.
Welcome to the Crypto Teacher, and I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we know your life is an illusion and TV is your reality. You play a president on a TV show and you become president in real life. And guys, with all the smoke and mirror around Sam Bankman-Fried, we know he was working on derivatives. And we had the BIS send out a warning earlier this month. And those who have my book know all about LIBOR. And we know LIBOR is coming to an end. Now, I've done videos on the Fed SOFR, on Ameribor, which is on Ethereum. And we had the bank man putting the finishing touches, taking all these derivatives and putting them on blockchain and being ran by an algorithm. We know the NWO causes the problem. Wait for the reaction and run in with the solution. And nobody's talking about the fourth industrial revolution, whether robots, algorithms, and drones take over the economy and the sheep go inside the metaverse. And remember, the Crypto Teacher told you, because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leverage to technology, and I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID Stories 3. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.